Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be doing our daily transparency update. So as always, breaking the portfolio down, showing the losses and gains for today. And this was actually going to be a pretty big loss day until we had some crazy news in the after hours where Tesla pretty much surged up like 6%. And that is really the benefits of having a concentrated portfolio. If you're new here and not familiar with the channel, my portfolio just includes three main positions that I've purchased with my own money. That is Tesla stock, Microsoft stock, and Apple stock. The rest of these are just free stocks. So this is one of those examples where it really shows the benefits of having a concentrated portfolio, where my stocks were down, like Microsoft was down 1.87%, Apple was down 2.45%. And thankfully, considering that Tesla is the largest holding in my portfolio, we had some really good news coming out on this stock today about the recently announced stock split, 5-for-1 stock split. So the stock surged up like 6%, and thanks to that, instead of me losing $3,000, I pretty much broke even. I actually probably gained about $200 if you just do some quick math right there. So the portfolio is sitting around at $108,000. It's at $108,644 right now. So we are in a decent position. I'm pretty much happy with anything above $100,000 right now, even if it goes into a downturn for a while in the next upcoming weeks or so. As long as it's above that $100,000, I'll still be feeling pretty good regardless. I don't get too worked up over stuff like that. But like I said, this is one of those days where it really shows the benefits of having a concentrated portfolio. Because for example, if I had like 10 stocks in total and Tesla only took up 10% of my portfolio, it would be pretty likely that my portfolio would be down significantly today. I would have probably lost like $2,700, especially considering that both of the major indexes like VOO, that kind of represents just the S&P 500, then you have the NASDAQ as well. Both of these are down today a little over 0.5%. VOO is at minus 0.60%, and then NASDAQ is at minus 0.81%. So as a hypothetical, if my portfolio was made up of just 10 various tech stocks, maybe a little bit VOO, maybe a little bit Amazon, stuff like that, it would still be in the negative today if it wasn't concentrated like it is right now. So even with Apple being down 2.45 and Microsoft being down 1.85, considering that Tesla takes up around 47-48% of my portfolio, because of that movement, it was able to bring it up a lot more. So this is really good for me, and day in and day out, the concentration method is working for me, and I'm really satisfied so far. I have no complaints with my experience with this strategy so far. So I do think concentration could be the wave for me in the future. I don't really plan on making any new stock purchases anytime soon. I'll probably just likely be putting more money into Tesla, Apple, Microsoft, and just those three stocks. So I'll just be focusing more on reinvesting back into those. But as always, if you all do appreciate these transparency updates, please make sure to smash that like button. It really does help me out. But just starting off for today, as you can see, for the normal market hours, and this is actually a rare occurrence as well to see the after hours exceed the normal market hours. Whether it's up or down, it still exceeded the movement that happened with the normal market hours. So like I said, minus 2.8% for the normal market hours. That's minus $3,035.02. And then for the after hours, we had a huge spike up at plus 3.11%. That's plus $3,275.70. So we gained a little bit more in after hours. This after hours will roll over for tomorrow as well. So it will be a little bit disappointing if tomorrow ends up under 3% growth. But regardless, like I said, I really have no complaints at this point. I'm pretty satisfied with today, but I have to admit, I was going to do another portfolio video at around 6 o'clock. That was just a little bit after the announcement for Tesla. And it was going to be a video, of course, doing the transparency update that I usually do, but also me talking about how Tesla was finally under 1400, and that I was going to be talking about how I was excited that it was actually dropping. So don't get me wrong, yes, I'm excited about this movement with a stock split, but I would probably be equally excited to see Tesla still going down a little bit as a discount, because I have been wanting to grow my position in Tesla before we see another crazy movement like we've seen over the past year. So I was getting pretty excited about it dropping down to like $13.75. It was definitely showing some signs of opportunity for me to buy at a lower price, but as you all know, I don't have any money to invest this month. Next month is another story. So I have to admit, it's a little bit bittersweet. I'm glad to see the stock growing, but it's also a little bit disappointing because I was getting excited over it dropping under $1,400. And some people may be thinking, why in the world would you be excited over one of your positions going lower? But that's just all about perspective when it comes to investing. Some things like a stock dropping in price that you own could be seen as a bad thing, but you can also view it as a really good thing if you see an opportunity there at that price tag after it drops. So like I say, as always, you can look at the red days as opportunities and the green days you can just be thankful for. But just addressing the market movement for today, it started out at 9 a.m. at minus 0.91% in the pre-market. That's minus $987. And then it slowly rose up just a tiny bit and then dropped back down until it rebounded to this point at 9:30 a.m. And that was at minus 1.04%. That's minus $1,132. Then we had a significant drop once the normal market hours started. It dropped all the way down to this point at minus 2.20%. That was one of the lowest points of the day, but definitely not the lowest. That is minus 23.79. And then it bounces back up to this point at 9:55 a.m. And then we have a little bit of that typical volatility that we've seen over these past few weeks until it finally bounces up to this point at 11:15 a.m. That's minus 0.58% or minus $627. And then it bounces around a little bit more with a downturn right here up until this point in the midday at 12:05 p.m. at minus 1.13%. And then it rebounds back upwards, hits this point, and then we have a little bit of a dip up until this point at 12:40. And then from 12:40 on, that was pretty much the highest point for the rest of the normal market hours. And we had a significant downturn after that, especially for Tesla and for Apple as well. Apple actually looks like it took a harder hit than Tesla did when it comes to the normal market hours. So we had a downturn with a portfolio, just a little few rebounds here and there, but the general trend is downwards. It hits this point at 2:40, then bounces back up to this point at 3 p.m. at minus 1.37%. Then it goes back down once again into this downturn, and at 3:55 p.m., that is probably one of the lowest points aside from maybe this one right here. And this is at minus 2.93%. That's minus $3,179. And then after this, we enter into the aftermarket hours at 4 p.m. So at 4 p.m., it bounces around a little bit. And then we hit this point right before everything goes crazy at 4:50 p.m. At this point, we're at plus 0.19% for the after hours, and then it totally spikes up after 4:50 p.m., and we hit this crazy point at 5:05, where we hit plus 3.78% for the after hours. That's plus $3,984, and then it just drops back down a little bit. I'm assuming it hit this point up here, and then a lot of people decided to sell, just hoping that they can cash out on some quick profits. We might have had some day traders after this point right here where it dropped back down after the peak, or there was probably just some other people cashing out as well, thinking that's their chance to take some profits. So like I said, it dipped a little bit after this peak, and then people took advantage of it at 5:35 p.m., bought in a little bit more, and that's why it bounced back up until this point at 5:55. And then we enter the 6 p.m. marker for the after hours. That's at plus 3.30% or plus $3,472.74. So really, we ended on a good note for today. This is one of those days that is a very rare occurrence where you have some crazy news come out in the after hours, especially rare if you disregard earnings reports. So this is something that you will very rarely see if you're not counting the earnings reports releases for the various quarters. So this was just one of those days where good news absolutely saved my portfolio. My portfolio would have been in some pretty big trouble today if it wasn't for this news of the stock split. But even if it did drop 3% at the end of the day, and that's just how it went, I was down $3,000, it honestly wouldn't be a big deal. I've gone through much worse days, minus 5%, minus 7%. Nothing really changes for me fundamentally when it comes to these movements, but maybe I would start thinking a little bit more of, are we going into another downturn, especially if stocks like VOO and NASDAQ are struggling in a similar fashion as well, like with significant drops. But that's not really the case right here. It just seems like there is a redistribution from some of the money in tech stocks back over to these vacation stocks and bank stocks as well. I know lately CCL has been up, and then some other ones as well. So money is starting to go back into some of these vacation stocks and restaurant stocks, and I think that could be some people trying to diversify a little bit. I think a lot of people especially started investing into tech after that crash, just because tech is one of the few sectors that excels even in a situation where all of the other businesses are struggling because of the Rona. And now it seems like people are starting to get a little bit more comfortable with the market. Therefore, that may be why we're seeing the tech stocks down and then some of the vacation stocks up and other ones like that we've seen over the past few previous days. Like either yesterday or the day before, I believe either NASDAQ and VOO were up, and the tech stocks like Microsoft, Apple, and Tesla, that's a little bit tech focused. Tesla's really just all over the place in terms of sectors. But like I said, lately we have been seeing the ETFs, the S&P 500 ETFs like VOO, and then also ones like NASDAQ, and then vacation stocks and bank stocks do a little bit better than the tech stocks as of recently. So there could be a little bit of a redistribution of investments right now going on as people people realize tech has been highly bought over the past few months, and they start to get more comfortable with the idea of investing in the other ones that have been struggling a little bit. So people are looking to make some money on the rebounds on some of these stocks. However, still it is a little bit risky in my opinion to transfer money out of tech stocks to put into airlines and vacation stocks and stuff like that, just because, like I said, tech stocks are still going to excel regardless in my opinion, whereas these ones can be negatively impacted depending on how the Rona situation goes. So for people looking for a nice easy rebound gain, you know, plus 30 plus 40% back just within the next few months, if you're actually looking to get some return with a rebound on some of those stocks, I think it's going to be a lot longer than just a few months, especially on these vacation stocks in my opinion. And if you're going to spend more than 3 or 4 months just getting that rebound back, then I think that money would be equally useful in tech stocks, because I think tech stocks are still going to continue to grow. Yes, there may be a little bit of a pullback because of all of this hype recently, but I still think tech is the future of investing. I know that may be a little bit of a controversial opinion, but when you look at the gross margins on services and software and see how easy it is to make money on products like that compared to actually having to manufacture products in a facility, pay people to build it, and have to deal with all of these other costs, it's pretty easy to look at tech and understand why it has run up so much recently, because of the profitability and how easy it is to make revenue and profits off of software and cloud services and things like that in comparison to actually a physical good. So I do believe that tech is still the future, especially just in the upcoming years or so. So that's where my mindset is at the moment. But just addressing the gains and losses for today, for Tesla stock, we are at plus 3.13% for today, and that is plus $1,528.81. And then for the total return, we are at plus 72.63%. That's plus $21,179.76. Now, this one was actually interesting. I wasn't too surprised about the stock split, but it also made me wonder, you know, there has been that common fan theory of, is Elon Musk trying to compete with Bezos on the stock prices to eventually get Tesla past Amazon in terms of a share price? That is something that a lot of fans have been thinking about, and including myself as well, because, you know, there's a little bit of a rivalry between Elon Musk and Jeff Bezos. He's called Jeff Bezos a copycat with the whole space thing, and especially with Jeff Bezos acquiring full self-driving electric vehicle companies like Zoox and stuff like that. Honestly, I don't have a problem with Bezos. If you actually listen to some of the things he said, it's actually pretty interesting, but I'm just a bigger fan of Elon Musk. But regardless, competition is amazing for the customers. The people that will benefit the most from competition are the customers. That just means they're going to be more competitive on pricing, the services that they're delivering, and the quality of all of that. But there was the discussion of would there actually be a stock split given that there is a competition kind of between Bezos and Elon Musk. But regardless, I still think the stock split is a good thing for especially investors that don't have access to fractional shares. There's a lot of opportunity now for people that wanted to get in on Tesla and just didn't have the money. So that's really cool in my opinion. I'm glad for people that finally get a chance to own Tesla stock, and I'm really curious to see how the market reacts to this stock split, especially in the upcoming month or so. We have not only a stock split going on, the potential of S&P 500 inclusion, and then also Tesla Battery Day on September 22nd. So I'm kind of wondering if we could see one of those typical Tesla movements where it starts surging once again, like how we saw from like December 12th all the way up until this point at like February 19th or up to February 4th, and like how we saw this point at June 25th all the way up until this point at like July 20th. So I'm wondering if we could see another one of those runs. I wouldn't be too surprised if we don't, but I think it's definitely possible. And we could start seeing a slow incline of the share price as we get closer and closer to the date of Tesla Battery Day, and especially if there is some announcement about S&P 500 inclusion. But just addressing the next stock, we have Microsoft, the second largest holding, and for today we are at minus 1.92%. That's minus $780. Then for the total return, we are at plus 19.17%. That's plus $6,408.03. And then finally, we have Apple stock, which is at minus 2.44% for today. That's minus $462.84. And then for the total return, we are at a nice 53.83% in gains. That's plus $6,465.30. So Apple has been that underdog that has really been making me a lot of money. And especially if I had more money invested in Apple, it would be making me a ton of money at this point. But I'm still really satisfied with my position so far. Definitely may consider adding more Apple or Tesla in the future. But as always, hope you all enjoyed this video. If you did, please make sure to smash that like button. And also feel free to check out Robinhood and Webull in the description below. If you sign up with my referral link, then you'll get some free stocks. And especially with Webull right now, you can get up to 60 free stocks depending on how much you deposit. Or if you just want to deposit $100, you get one free stock for that deposit and then another just for signing up with my link. But hope you all enjoyed this video, and I hope you have a fantastic rest of your week.